Okay, and all right, live on the new computer now, or new hard drive, I mean. All right, so just catching up really quickly. So hard drive died previous week from the video. I was able to actually do it this weekend, which is fine. It's nice. Yeah, so lot happened this week. Um, yeah, market really moved, and we were basically on a nice edge, as people like to say. With the market, it seems like we're up in the SPY right now, but I don't believe it. I don't believe any of this stuff. But for those
Guys,
of you
welcome to
who
Border
watch
Rate.
me, what the hell? Oh yeah, I'm still in Discord. All right. Okay, I had to move. Give me 1 second. Still have not set everything up. I figured one little secret, and that is that every time I put in so much tremendous effort into stuff, it usually falls flat and people don't like it, and people with like lower effort seem to, you know, beat me over this situation. I don't know why they succeed over people like me who want to try to put in a lot of effort, but it is what it is. So I guess I'm the one in the wrong here, and I'm doing it all wrong. So I'm just gonna do it as poor and as scuffed as possible, and as just like the most minimal amount of effort. Like literally, I didn't even try to comb my hair this morning. I just rolled out of bed. So that's the start of it. So yes, I did just roll out of bed, and I'm just going to post this on Twitter now that I remember this. Twitter. Is the link to this. Hey, what's up, Neandra? Sorry, I just like I don't know if you caught my whole rant before this, so it's just like I've noticed something really irritating, and I don't know if it's just because I have like the
Before
wrong.
this,
So it's just like, oops. I don't know if I just have the wrong calibration or if it's just like, um, yeah. I don't know if I'm just wrong about that. Give me a second. I'm just gonna post this. So, going live, talking about market structure, market mechanics. Then, let's see. Okay, going live, talking about market structure, market mechanics, and then don't know what hashtag to use actually. Yeah, I just use AMC squeeze then. A fan of this one, but whatever, it's trending. Ugh, and they're still not doing embeds. Great. All right, well, anyways. So, what's up, Neandra? Uh, I mean, like, I don't care if it's scuffed. I just want it to be somewhat functional, and a lot of the stuff I'm doing right now isn't really functional, which is kind of annoying. But whatever, it is what it is, and I can't. I'll fix it when I can, but I have no. Yeah, I have no. Yeah, whatever. No words for for it right now, apparently as well. So, first thing I was going to delve into is obviously not the most hype thing. It's a little bit of what I do, and it's actually into a little understanding of what I do as well. And one of it is having to do with order flow trading. And when I talk about prints, like I'll say something like, for instance, right now, like I see a million shares on GLDM or something like that, right? And what I mean by that is that, like, pull it up. Okay, so yeah, I'll see, like, you know, a million shares fly across at this price, whatever, a million shares there, and it's like, okay, well, how much does this do on average? This is just normal, right? So there's no data for the average volume on this thing yet, but let's say that this was about a million, right? And it did its entire day's volume in that one entire print. That thing raises flags to me. Why? Because I know that someone is not moving an insignificant amount of money. That's a lot of money. That's a lot more than what normal retail, I'm considered retail now, but retail traders have in their bank accounts, and especially in the trade accounts. So if someone like that is moving, they're not going to move, like, you know, without reason, because that's just stupid, right? So this touches on a little bit of it, but it's not the entirety of it. It's just kind of it kind of gives you a little insight on how it functions, and the goal of it isn't so that you copy me 100%, because I like honestly a lot of this is like, shadowy meeting in the corner of nowhere, and you basically just have like this private conversation with people like that. That's just how like essentially this was kind of taught. They don't really post this online. You don't see a lot of insiders. There's not. It's a really exclusive club and stuff like that. But whatever. So, and everybody has their own interpretations. So, let's get this started. Not gonna dox myself again. Let me see if I can get this on the reader. Second. The app. Extensions. I cannot find the extensions for this thing. All right. Screw it. I'm gonna go throw this on this one just temporarily because I need the reader. Okay. Oh wait. Hang on. Unless you prefer I read it to you. I don't know. Neandra, you're the only one here, so you let me know. I can't get this to work. Yeah, no, I can't do it without actually throwing it on my regular thing. Yeah, I'll throw it on my regular thing. I read slower vocally, and I read really quick in my head. Oh, I can just leave this off screen and do that. Okay. Almost there. Should have prepped all this stuff, but like I said, apparently people don't like the whole like pre-prepping stuff. Or sorry, it's not that they don't like it, it's just that the pre-prepping stuff never seems to work.
You've likely heard of order flow. Traders who use it will often tell you how advantageous it might be, if only because so few retail market participants know about it or know how to use it.
Okay, there we go.
That mysterious edge. You've likely heard of order flow. Traders who use it will often tell you how advantageous it might be, if only because so few retail market participants know about it or know how to use it. The strange thing is that order flow means many different things to many different traders.
Like I said, when I preface this, like, it seems like magic to people.
You've likely heard of order flow. Traders who use it will often tell you how. Why? It's all about platforms, or rather, the tools one uses to see, decipher, and exploit order flow imbalances. The goal of this ebook is to lay the concept out bare. Order flow is a simple concept, it's all about supply and demand. What makes it tricky is that it's about the micro levels of supply and demand occurring at a rapid and real-time pace. Once you gain a basic understanding of how order flow works, it may or may not be something you'd want to use as part of your trading approach. It all depends on your overall trading approach and your trading platform's capabilities. But, order flow is something you should be aware of, for it's the mechanics driving the short-term trading process. In short, the process that contextualizes your trading, whether you pay attention to order flow or not. Understanding order flow and how it might indicate market movement. Over the last few years or so, order flow has become something of a new buzzword in retail trading circles. It's almost as if there's an air of mystery surrounding the idea, a code that might give one trader a significant edge over another. The irony in all this is that order flow is one of the oldest, most basic, and almost primal functions of the market. There are traders who are willing to buy or sell at a given price limit, as in I want to buy or sell at this price or better, and then, there are traders who are willing to cross that limit, buying or selling at the best available price. That's order flow in a nutshell. If order flow is mysterious, it's because its nuances are not easily understood, or for those who do understand it, the data is not always accessible, save for special software and data feed. But regardless of whatever tools you may have to decipher and interpret order flow, you can never anticipate the buyers and sellers who jump in out of nowhere at a given moment, making the market environment more dynamic. We'll start by covering the basics of order flow and its practical use as a possible market movement indicator. What is order flow? Order
Alright, so
order flow is essentially the interplay between two types of orders. 1. Limit orders, most of which are visible in the order book, aka depth of market, DOM, price level.
So basically, if I can find it. Okay, no, I'm not going to dox myself with this. Okay. Go to quotes. Okay, yeah, here we go. Here's a great example of that. So depth of order, sorry. When they talk about the DOM and the depth of market and stuff like that, they're talking about this. So you see how there's edge A, edge X, NYSE, and so forth. You can see them all on the price levels all the way down. So that's what they're talking about when they're talking about order flow. So market order. So yeah, all right.
Order flow is essentially the interplay between two types of orders. 1. Limit orders, most of which are visible in the order book, aka depth of market, DOM, price ladders, etc. And 2. Market orders, which aim to buy or sell at the best ask or best bid respectively. These you can't see beforehand. This interplay between limit.
So the other thing about this is that, for this thing, this is what's called the lit market, right? So if you wanted to buy, LinkedIn or whatever, I don't know if this is LinkedIn, but LNKD at 175.20, you will appear there, depending on what routing you take, whatever. But you will appear there. When they say that you can't see them beforehand, for the market order section, it's basically because the people who market order just want it like that. They just want it there. So when they hit it, they will just immediately go there. They won't be sitting on the book. Typically, yeah, typically you won't see it until after it happens. And on top of that, when I talk about the dark pools, which no one seems to pay attention, if I told you something like, if there was actually an order here at 24, yes and no, you might say like, oh, you're crazy, that's not possible, that's not there or whatever, right? It's mostly because, and the reason for this is because you don't have the specific data feed to tell you it's there. You can see this all the time in, like, Thinkorswim does this nice little thing where it'll show you, like, on the order window, it'll show you like a certain price. It'll say the spread's like 3 cents or whatever, right? But when you pull up the level 2 for this thing, it'll say the spread's actually about like, 5-10 cents or something like that. That's because you're not getting that specific feed to tell you that, that one that's closer is there's someone actually there and closer there. You can't tell, how much is actually there, and they won't tell you, but you'll see it on the order window, but you won't see it visually on this entire like depth of market. Again, it sounds like it's unfair, but you can pay for it. It's just, you need to know what to ask. Whoops. You need to know what to ask for. Most people don't know how to ask for this stuff.
This interplay between limit and market orders is one of the main forces that drives price movement. To get a better understanding of this process, let's explore how the order book works. The order book, aka DOM. Depth of market data is also known as the order book, since it shows the pending orders for a particular market. Below is a hypothetical rendering of the DOM for the E-mini S&P 500 futures. Here's what you need to know. The middle column shows prices. There are 10 bid levels and 10 sell levels shown in this example. The best bid and best ask are those nearest one another. All of these orders are limit orders, meaning that traders on the bid side want to buy at the price corresponding to their price ladder or better. The reverse is true for sellers. Important, these orders will likely not get filled unless a buyer is willing to buy at the ask or a seller is willing to sell at the bid. Enter the market order. A market order means fill at the best bid or ask. It's another way of saying get me in or out of the market now.
Oh yeah, Neandra, I wanted to get your opinion on this too, by the way. I'm actually not sure. Am I able to restream to Twitch? Because as much as YouTube is great and all, I think the focused reach is kind of how should I put this? I'd need a large audience before I even become a blip on YouTube's popularity thing or whatever, right? Because it's the same situation. Whereas Twitch, although it's somewhat focused on an individual, they're not streaming today, but I think the discoverability is slightly better because it's not as crowded. But I don't know. I don't know if you're still here or not, but let me know on that.
A market order means fill at the best bid or ask. It's another way of saying get me in or out of the market now.
I promised I would swing through, and here I am.
Hello, Millennial. And for those who don't know, this is Millennial, and I forgot to engage streamer mode in my freaking Discord. So, yeah, this is Millennial. He is someone I met a year or two ago. A year or two, I can't remember, but
I don't know.
he's a marketing expert who I've never. I keep saying this. He's the only person. He's one of the few people I've ever seen to take up trading with that kind of veracity and that kind of pace. Like I've never seen someone adapt so quickly to different market conditions. Like you've been in a downturn, you've been in a bull run. Like you've experienced it more in a year than most people have in like a decade or half a decade or a decade. And actually, you'd be the perfect person to ask this question to. So my question to you is, I'm not sure if I should actually also multi-stream into Twitch as well, because for the most part, I'm not saying that I won't face any competition, but I'm not really contractually tied down to anybody, if you know what I mean, right now. And I figured right now, with the problem with YouTube streaming is that you already have to have an established base, which I don't have right now to kind of even make a modicum of an impact. Should I actually expand to Twitch a little bit, because although I probably will experience the same thing, it probably wouldn't hurt to have some sort of inflow in there.
Until you're partnered, you should restream everywhere, is my opinion, because you don't know where you're going to gain traction.
Okay, all right.
That's just my opinion. What are you looking at?
Okay, so this is something that I posted early in the week. It was talking about the GFF broker thing, where it was talking about order flow trading and how it works and stuff like that, right? I just wanted to go over it really quickly because you know how that crowd of people who don't understand what I do, I figured this would give you a little bit of insight, but like I'm not going to tell you how to do it one for one, that sort of situation, right? So this is more designed for stream everywhere, no downside but discoverability. Yeah, I figured as much. But I figured it'd be a good way to kind of explain a little bit what I do, why it seems mysterious, and why it seems like there are a bunch of people in a secret little club. But to catch you up, basically, they were talking about like how if you look at my screen right now, like you have this window, right? This is what you typically see. You see Edge A, Edge X, NYSE, and all that sort of stuff on the stock. They were talking about depth of market, and that's something you have to pay for because that's level 2. You will see, people post orders down below buying, X amount in size and stuff like that, right? And one thing that this thing doesn't touch on, which I did, was that you won't be able to see. Hey, Rita, you won't be able to. You can come in here too, Rita. Right, Rita? I told you. I literally told you can do this to interrupt me back when
she knows.
So
she knows.
So I was telling people about how, like, if you look at this, 175.22. If I put an order at, let's say this didn't exist here, right? We didn't see anything between that and 15. If I put an order there at 20, I should typically show up because that's what's called the lit market. I'm posting my order, letting people know. It's like, hey, look, I want to buy this at, 75, 20 cents, so forth. But there's a really weird little nuance to that where if I post it and route it to a certain exchange, it won't show up for you. And there's a multitude of reasons for that. The primary one being that you're not paying for that feed. So you're not able to see my order there. So, like, you're basically screwed. Like, you don't know how much I have there, and you can hit me all day. If you can't figure out how much I have, I could be just bluffing, or I could just be a whale. You can never know, right? So that's why it's a little of a bit of a guessing game for the most part. But yeah, I'm just continue. So let's see, where is it? I lost my tab. God damn it! You guys coming in made me lose my tab. All right, here we go.
Notice the price highlighted
You told
in blue.
me to come in.
I didn't tell you.
Price. Note that the last trade
You
took
told me you
place
were
on the best ask
streaming,
side,
and I should be
meaning a
here,
buyer
and
stepped
here
in
I
with a
am. I
market
came
order,
to be
and that order
helpful.
was matched to the best ask.
Okay. So my issue with order flow is this is big brain shit. So I love this for somebody that's got the cojones to actually trade this, but it takes some serious cojones, understanding of market mechanics. Like this is big brain shit. This is not basic bitch shit. This is, look at you with your chroma showing off. Fucking pro streamer here.
I forgot my layout in the old well, actually, I don't know where I saved in my old hard drive. So
you need to bounce a light source off that chroma screen that you're using though, so you can get a better.
It's not a chroma screen. It's just the NVIDIA broadcast like bear.
Oh, that's why. Okay.
Yeah. I'm not gonna buy.
I mean, it's doing a pretty good job, actually. It's doing a pretty good job.
Yeah, like the only issue is obviously like if I was to black out that window in the back there, it'd be perfect.
Yeah.
But because like behind me, it's basically like a blue screen, like a really light blue screen too, which works, right? But you know, this is fine for what I'm trying to do and stuff like that. And honestly, I don't really care. So, what's up, Billy Butcher? I am excited.
Back to your order flow because Neandra wants to learn. So
I'm excited for the boys
big
next
brain,
season.
High risk.
All right, fine. All right. So, where was he?
This interplay between a limit order and market order forms the basis of order flow. But, how does order flow move prices? How order flow moves prices? Imagine working as a trader for a large institution, like a major alternative investments fund. To satisfy your fund's allocation requirements, you need to purchase a whopping 10,000 ES contracts at the market. Given that you need to fulfill your fund's allocation ASAP, you decide to buy it all at once, knowing that you're actually...
Okay. Without going further, you need to buy 10,000 ES contracts, right? What's your current issue right now? Immediately, what's your current issue? Anybody? I don't know if Rita's still here, but she could probably point this out. Millennial. What's up, Chris?
I don't know. This shit's beyond me, man. I'm trying. I really am.
Okay. So, if you need to buy 10,000... Okay, yeah, there you go. Rita finally answered it. So, if you're hitting 10,000, you're going to hit this all the way up. If you were to slap that down right now, you'd be getting an average price of like $27.99. Like, I'm just eyeballing this. It's probably not that, but you're going to get $27.99 because you're just basically going to slap your giant 10,000 ES order in through there, and you're going to just sweep the entire book. You don't want that because it gives you a horrible price and it gives you a horrible slippage. Like, there are algorithms out there that are so fast. It's one of those competitive games out there where it's like, oh, if I see you firing that order, that 10,000 order, and I know you just want, you don't care what price it is. If I'm the one filling this book like on this upside, I'm just gonna pull it away. I'm just gonna essentially just pull it away. I'm gonna let you fill this at like 3,000. So that now you have 10,000 ES contracts at 3,000, and then I'm going to repopulate the book after this. Immediately after you fill that, if there's an empty space there, I'm going to repopulate it with all these orders. Now you're out about 200 full handles on 10,000 contracts. That's quite a steep hole. So this is
this is 3-card Monty,
essentially,
but with large amounts of money and institutional backing.
Yeah. So
find the Red Queen. That's what you're saying. It's a game of find the Red Queen and knowing that the Red Queen's not actually ever there.
Yeah. So obviously, like, you don't want to do that. You want to get in at the best price possible around here. And this is mostly for futures, right? For stocks, in the old days, I don't know if they still do it. I'm pretty sure they still do it. You can essentially have a bat phone next to you and just call up like some market maker or some market specialist and say, hey, I got, 100,000 shares or X amount of shares. I need to offload this, or I want to acquire X amount. What can you do for me, right? Market maker will say like, okay, yeah, give me a second. He'll go, he'll see what his inventory is like. If he can't acquire it, if he can or can't acquire it, he'll be like, okay, well, I can give you like a 3-cent improvement, or I can give you, the entire thing for just the 3-cent deficit or something like that. It's a lot better because those guys are designed to handle your larger orders, but you don't want to just slam it.
They can handle a bigger load, is what you're saying.
Yes. I didn't realize it until I said it. Okay.
Given that you need to fulfill your fund's allocation ASAP, you decide to buy it all at once, knowing that your actions are likely to move price as soon as you hit all of those asks. So you place
the new way it's posting on Bloomberg terminal.
ES contracts.
The what?
Yeah, they're special, all right.
So you place a large market order of 10,000 ES contracts, all of which will get matched to the asks on the screen. In slow motion, here's what may happen.
There's the Rita we know and love.
Moving the last
Bigger
trade in current
loads.
price to 2,800.00 from
Okay,
its original 2,792.75 position.
You still need to understand the bullshit, right? You still have to understand who it is that's there, and you have to consider their narrative, right?
Yep.
So if you see Goldman at a price point, you have to ask yourself, why is Goldman there? You have to assume that Goldman might not even be there. But why does Goldman want you to think that they're there? Right?
True. They're
So my issue with this is they pay people like me all day so that you don't understand why they're there. So how do you overcome that gap?
you basically have to learn how this game is played. Like that's just that you have to realize there's like Rita says, there's a game being played around you. You have to understand that. Once you understand what the game is, then you could basically. It's like that saying that that got stolen from me, where I'm just gonna say it again now. But once you understand the rules, you know how to exploit them. It's simple as that. Like
I'm there, but Neandra actually wants to be able to do this. So telling her she has to understand the game is not enough. How does she go about doing that?
Well, you could work for an institution. That's what I did. So
okay, yeah, okay. So that great. That's one way you can do it. Work for an institution. How else would you go about doing it?
Well, reading is a very strong thing, which you have
what
a
would
great.
You read?
Oh god, this is something that you can't really. I was taught this firsthand. I was not like read up on this, so that's something I'd probably be somewhat weakened. So I'm not 100% sure on that front. There's not a lot of open talk about this because a lot of people are hit under NDA. Thankfully, I'm not under any of that stuff. I didn't make it to that point, so
yeah.
Yeah, I'd say just keep your ears peeled and just do some research. Like the third option is just to test it and do some research upon it. Like what I was explaining before with the order, like being able to see certain orders and stuff like that. You can see that on a trader workstation with IB really easily. If you pull up like a really somewhat illiquid stock, not that I suggest you trade it or anything like that, but if you pull up a somewhat illiquid stock and I don't know, look at their options, for example, right? The spread might be 2 cents. But if you look at the chain or you look at the book and stuff like that, you'll say like, okay, well, if this is 2 cents, then why is it showing 15 cents by 30 cents? That doesn't make any sense, right? The answer to that is basically you don't have access to those books, but let's say IB can see it or something like that because just because you're not paying for it doesn't mean it's not there, that sort of thing. But I don't know. Maybe Rita has a better answer on this. Her streams.
Okay, I'm going to add one more answer. Okay. So I agree with you. Join an institution or know somebody at an institution and pick the rate for sure. That's one way to go about it. Trial and error. That's obviously another way to go about it. The other way that you can do it, guys, if you're not willing to throw money into this big brain game, is backtest. Okay, backtest. So go back and look at, okay, I see Goldman here. They're pretending that they're here on this. Go look up every article you can on Goldman, okay, and their stance on that position, and see what their narrative is on, okay, and then weigh that against what they're actually doing on that position. And what you're going to find is a trend and a pattern. You're going to have to track a journal. This could take weeks. It could take months, depending on how much detail you want to get into. But actually track what it was Goldman's public stance on this. So let's use Boeing. Goldman is bullish on Boeing. They set a new price target. They set it high. Meanwhile, you're watching the order flow and seeing them actually take short positions against the stock. Why would they do that? Constantly evaluate what's actually happening in front of you. Look at it. Okay, Goldman's got a position on this. What do their articles say? What are their positions on this? Right, 13Fs are another great way to go. What are their actual holdings? What are they actually doing? Right? But compare it to the narrative that's out there. Very quickly, you are going to find patterns in their bullshit. That's the thing with liars. They think they're so smart that they create the same system and they keep doing it over and over and over again, thinking that they're too clever to get caught.
Oh, it's even better.
If you can recognize their bullshit, you can capitalize on it.
No, it's even easier nowadays because they'll openly they'll openly tell you that they're lying to you, and you'll just eat it up. But there's a lot of articles out there. Like, oh, actually, one great example that Rita had the other day was, remember when Jamie Dimon's stance on Bitcoin? Originally, he said, "Oh, anybody caught in my company caught in JP Morgan trading Bitcoin will be fired," and then later he changed his stance. yeah. Anyway, so continuing. But yeah, 13Fs are a great way to tell whether someone's lying or not. You can always look at that, or go NASDAQ, for example, right? And you can just look at the stock and see. Granted, these are quarterly type of things, but you can go on the individual stock, go to institutional holdings down here, and you look through. You look through who's holding it, who increased their position, who decreased their position, who sold out. Get wrecked, Wedbush. What their activity is like. Look, Goldman's here, which I know. I'm pretty sure I can't see Millennial right now, but I'm pretty sure he's smirking if what I just pulled up. But yeah, screw you, Millennial. I'm gonna keep going.
You bought every ask.
I didn't say a word, man. I'm being good. I'm being good.
2,800.00 from its original
I was right, but yeah, I'm being good.
2,792.75 position. You were basically the market's whale at the moment. What are trade imbalances? Another important takeaway from this is that you caused massive trade imbalances in the process. How so? If a seller places an ask of 100 contracts and a buyer fills it with a market buy order of 100 contracts,
Rita.
then that's a balanced trade. You want 100 contracts.
Oh, let's short
and
this
I
thing
have
into
100
oblivion
for you.
until all the retail
But the
traders
hypothetical trade we
think
just
that it's
placed
absolute
was
dog
highly
shit.
unbalanced.
Perfect. Are all the
Let's
retail
take a
traders
look
out of
at it
this?
again.
Perfect. Now we'll buy.
Your order of 10,000 contracts was 9,708.74% greater than the available number of contracts.
That's where Mel
That's the
Gibson
best
comes
ask.
in.
Once filled,
If
you still had
I've figured out anything with this order
9,890
flow trading, it's you have to be able to Mel Gibson your positions.
So right there it says this seller placed 100, blah blah blah, and so forth. Your order of 10,000 contracts was 9,700% greater than the available number of contracts at the best ask. Once they're filled, you just had about 9,897 left to fill, but only 524 contracts are available at the ask. Your market order exceeding available contracts by just under 2,000%. So again, you are going to spill over into the next level there.
Let's suppose that we consider any market order exceeding 300% to be an imbalance. There is no standard for this figure and it varies according to the trader. In this case, all of the highlighted percentages in green indicate an imbalance. And how might knowing this help you as a trader? If you can identify the trade imbalances, you might, that is might, be able to get a clearer indication of the bullish or bearish bias of a given instrument. Taking advantage of order flow trade imbalances. We have covered the basic mechanics of an order book as viewed in a DOM in the previous section. The only setback in following order flow from a DOM is that once the order has been filled, the numbers change and you have no record of how many contracts were bought and sold.
Okay, so this is saying that you have no record, which, I mean, there is a tape too, but this is why I do mainly stocks, because they have to report to the tape. Although there is some little tricky maneuvering they can do, they still eventually have to report their trades on the tape, whereas the futures, like, you can just look at it at the chart and stuff like that, but getting tick data is expensive.
We have covered the basic mechanics of an order book as viewed in a DOM in the previous section. The only setback in following order flow from a DOM is that once the order has been, if you are looking to use order flow to inform your trading, then you need a record showing how many contracts were bought and sold at a given price. Otherwise, you'd have no way of keeping track of order flow and, more importantly, identifying where trade imbalances took place. For instance, let's imagine a hypothetical scenario where a trader is willing to sell 200 ES contracts at the ask at the price of 2,170.00. Another trader is willing to buy 125 contracts at the bid at 2,169.75.
69.
It
nice.
would look like this. Then suddenly, a buyer comes in and snatches up those 200 contracts at the ask. The ask is now at 0 and the last trade is now at 2,170.00. Buying and selling happens quite frequently, but were there more contracts bought or sold over a given time frame? If there were more bought than sold, then that might indicate a bullish bias. If more contracts were sold rather than bought, then that might indicate a bearish bias.
It's a very simple kind of like, there are more buyers than there are sellers, then price goes up. If there's more sellers than there are buyers, then the price goes down situation. And this is also why one of the tools that I mentioned before was called Bookmap, and the Bookmap basically shows you the order flow of like people who are how many, like it was like basically like a little heat map on there's a little heat map on the futures market with the here we go. So it looks like this. It's a gigantic mess, but these little red zones are basically when there was like a high frequency of trades and a lot of orders and so forth. Like it gives you a lot of data to crunch through, which is a whole thing in itself. I personally won't use it because I don't trade futures, but I think if you combine the knowledge from this plus the Bookmap, you could probably do quite well with it. But again, I don't trade futures, so.
Buying and selling happens quite frequently, but were there more contracts? What were the bigger purchases that took place? With a DOM, there is no memory or record. But you need
All
the
right.
data if you plan on using
I swang
order flow
through.
to
I love what
inform
you're
your
doing.
decisions.
Order flow's not for me, but I think I could still read BS on it for sure. It's just not a game that I want to play, I don't think, but I love it. Hopefully, Neandra, this will be helpful for you. I've got to go get ready because we are going to watch Big Short. So I got to go get ready for that.
I thought we were gonna do that reaction thing later, though.
Which one?
The react thing to the really bad when I guess financial insights that these kids have.
We could definitely do that later. Right now, I'm gonna go get ready for a Big Short marathon.
All right.
Yeah. If you're not following, follow. If you're not subscribed, subscribe. And click the bell so you get notified next time we go live, because he's going to keep doing this, is my understanding. So,
I don't know. I'm trying to figure out what works right now, but we'll see. So, I need data. All right, later, Millennial.
He's not very good at selling himself. So, same bad time, same bad channel. I'll see you guys next week. Bye.
What were the bigger purchases that took place? With a DOM, there is no memory or record. But you need that data if you plan on using order flow to inform your decisions. Enter order flow software, popularly referred to as footprints.
Oops, sorry, 1 second, I lost my page there. So page 8, okay.
Using footprint charts and other charting studies to interpret order flow. A footprint chart is a volume chart that records how many bids and asks were filled at each price level for the chart's timeframe. With a footprint chart, you read numbers diagonally. The above footprint shows that 10 bids were filled and 10 asks were filled. This is a balanced trade, a 100% match. A buyer wanted 10 contracts, and a seller sold 10 contracts. Now let's look at a different footprint. The above footprint shows that there were 200 contracts bought at the asking price while only 10 contracts were sold at the bidding price, during a specified time period. 200 contracts bought versus 10 sold. That's 2,000% more contracts bought than sold. Let's suppose that we consider any market order exceeding 300% to be an imbalance. There is no standard for this figure and it varies according to the trader. 2,000% is well above the 300%, huge by most any standard. From an order flow perspective, this may indicate bullishness, whether the price went up or down as a result. It may mean that many buyers jumped in. If price went down, and trade imbalance...
Okay, so just to digest this normally and stuff like that, basically it's saying that, oh, well, you know, there were about more buys than sells, and therefore this could indicate, you know, the price is going to go up, that sort of thing.
If price went down, and trade imbalances still indicate stronger buying pressure, then the order flow may present an opportune moment to go long. Now, we have demonstrated the importance of footprints related...
So, again, to reiterate that, so if price went down and trade imbalances still indicate stronger buying pressure, then the order flow may present an opportune moment to go long. So basically, if price goes down, but there were still more buys than sells, it's kind of like the buy the dip narrative that people like to try to spin. So,
if price went down, and trade imbalances still indicate stronger buying pressure, then the order flow may present an opportune moment to go long. Now, we have demonstrated the importance of footprints related to order flow strategy. It's an effective way to get a big picture view of trade imbalances. Let's take this a step further. Let's review the footprint starting with from the top. 352 contracts were purchased while only 26 were sold. That's a 1,353.85% difference, again well above the 300% standard
remember,
we decided
you're reading
on.
diagonally up.
More buys than sells. All of the imbalances are highlighted green, indicating that buying pressure, selling pressure. In a reverse scenario, you may come across a chart similar to the following. Again, note the buy vs sell imbalances. Below is an example of a footprint chart with the DOM ladder in the Sigma 360 Trader platform.
So again, whoops. Sigma 360 is also a different platform, but again, this is somewhat similar to this. This one just looks like a bigger mess.
Below is an example of a footprint. Now if we zoom in on the same footprint chart on the left, you can see the actual numbers more clearly. Another popular charting study for interpreting order flow is called volume profile. This study displays the distribution of volume traded at each price for a given period of time as a vertical histogram. This identifies how trading activity is distributed by volume and shows key support and resistance levels by identifying areas of high volume. Below is an example of a volume profile study with the DOM ladder in the Sigma 360 Trader platform. The main takeaway is that in order to use order flow to inform your trades, you may need to identify and chart the imbalances between buys and sells. And one effective way to accomplish that is to have a histogram that charts the volume behind these purchases. Without an adequate record of trade order flow, you may not be able to take full advantage of order flow data. Speed, limit.
Okay, so here's some issues with this, okay? This doesn't really talk about it, but there's one key weakness that I see in this, and that has to do with tracking, time tracking. Is this contained within a single day, or is it just whenever you start? You have to keep it going, keep a long record of this sort of situation, right? That's something that this doesn't answer, but I can somewhat answer this for you and track it all. I would say track it all, because you want to know how price would actually react around these levels, because these old levels are somewhat important. When I first started, my floor manager Lisa, she said she had lines on there for like decades because they were that relevant, and I thought she was crazy and stuff like that. But she had it and it worked for her. I mean, she had quite a successive career and everything. But yeah, it baffles me. And like Darren was the other manager. He had like an entire book where he wrote down all the levels. He would like actually go back, like he'd had stacks and stacks of these notes and stuff like that. He would go back and say, okay, last time I traded JP Morgan, how did I feel? What did I see? What were the levels that were relevant? What was I looking at, and so forth, right? That stuff maintains some sort of relevancy. Granted, we're in a stock market where we're in the highest we've ever seen the stock market, like all-time highs and stuff like that. But you know, chances are if we fall back down, not saying we will, but those previous levels from before will become relevant. And similarly, on the opposite side, if we ever come back to these levels and try to exceed it, these levels become a lot more relevant. So keep a record. And some of the people I know have like a spreadsheet that are like my arm's length in data and stuff like that, where it's just one stock that they track, and it's usually the SPY with the amount of shares that go through. Like I was doing it yesterday with GovT with the 26 or 24, 44. There was 10 million shares that went through that level. So again, it's one component of a bigger picture that you have to kind of take away from that.
Speed, limit orders, and the other side of order flow. We have now covered the way order flow works and how to take advantage of the imbalance.
Okay, so basically, now that you know how it works, this is how they, in their view, how to take advantage of it.
We have now covered the way order flow works and how to take advantage of the imbalances within the order flow process. Now we'll dive into the other side of order flow, the more passive space of limit orders. A limit order is simply an order to be filled at a specific price or better.
So that's you just putting out a limit order, not getting filled right away.
25.00, then a limit order at that price seeks to be filled at that specific price or any price below it. If you aim to sell or go short at 25.00, then your aim is to sell at that specific price or higher. Simple enough, right? But anyone who has traded live knows that limit order don't always get filled.
Yep.
You place a buy limit order at 25.00.
And we just saw the example of why your order wouldn't be filled, because there's not enough shares there. That's an issue that I encountered earlier this week. If you guys were on Rita's stream, which I think that link down below, I was talking and complaining about an illiquid market and trying to get out an absorbent amount of shares. I was having that issue.
You place a buy limit order at 25.00 and see price move below your price, perhaps as low as 24.50, yet price moves back up above 25.00 without giving you a fill. Why not? What happened? The likely answer is that traders with market orders started buying higher before your order got filled. So who got filled between 24.50 and 25.00, and why didn't your order get filled? The likely answer is that you were not at the front end of the queue.
Oh yeah, that's another thing I forgot to say. So in order for you to get your fill as well, it's by priority and it's by. So when you're listed on different like market makers, when you're routing and stuff like that, you got Edge, Bats, Arca, BossX, Nasdaq, Island, Pearl, MiAX, so forth. Oh, there's a lot. So the priority queue goes basically like this. Which ECN am I which ECN am I hitting? If I'm hitting the same ECN as you, then it goes by priority. If it's not, then it goes in priority of whoever, depending on whoever they have it set to route to. So like, you might be ahead in the queue and stuff like that, right? But if they chose to route to the exchange behind you, it'll go to them first, despite you being first in queue. So it's a really weird little nuance that to understand there, like the priority of orders, but it's important in terms of like getting fills. And I had to know that because when I was working at my firm, you had to understand for liquidity providing, you want to get that fill because that's how you get paid. So if we know of high volume levels, that should be something to watch. Let's say if SPY drops, we know it's going to get bad. Yeah, typically. Like I know people, and I'm guilty of this for doing a lot of technical analysis, like drawing lines through like highs and lows and stuff like that. There is a reason there, and it does maintain some relevance. Not always. Like it's one of those things where if it is, it is, but you need some other supporting evidence to back it up.
In short, you were close to last in line to get filled. And what made the difference between you and the other trader who got filled? The answer is likely speed. Your order routing might have been slower than the other traders whose orders were earlier on in the queue.
Oh yeah, and if you want a great example of this in terms of routing speed, Flash Boys, they drilled through flippin' mountains just to get like a fraction of a second, like a single nanosecond faster in terms of execution speed than some of their competitors. There are buildings around the exchanges where where the New York Stock Exchanges, banks pay big money to build just around them because that they want to shorten that distance from they want that shortened distance because the execution speed, just like a sliver of a nanosecond, they want that type of advantage. And what Flashboys covers is basically, if I know that you're going to fire, and this is essentially a form of front running, if I know you're going to fire down in order, and I can screw with you, right? I can pull the price away, so I have you chase that price because I know you want that order immediately. And let's say you have, like, let's say I'm holding the same amount of shares that you want to grab there or whatever, right? Every time you try to fire your order, it's like, oh, too close, but no cigar. So you cancel your order and I bring it back down. And then I do another game with you. It's like, I'm back there again. You're like, okay, cool. I want to grab it again. Nope, just too slow. Try again. So you try again for the third time. You get frustrated, and what do? You mark it in, right? So when you mark it in, it's like, oh, you're going to mark it in. It's like, all right, cool. You got me. You got me up at this high price here, and I'm going to bring it back down to you. Again, this is the important stuff on learning how to get good prices on your trades.
The order queue and why execution speed makes a difference. Take a look at the hypothetical price action below. You placed a buy limit order at 25.
Oh yeah, and obviously, the way you kind of overcome this is there's a couple ways to overcome this. Hold on. So there's a difference in drawing line patterns levels. Yeah. See, yeah, that's actually true, Chris. So the problem with drawing lines, and I'll come back to that in a second, but the problem with drawing lines is that a lot of these pattern recognition stuff, it's subjective. And I can't tell you the amount of people that have been on the floor that have like mental breakdowns because they say it's like, oh, that should have been the head and shoulders kind of pattern, or was a triangle wedge and stuff like that. They just go into this weird meltdown mode. But unfortunately, so back on the other subject, the unfortunate way to kind of get these orders to overcome this, especially as a retail trader, simple answer is you can't really per se. The only advantage that you have would be basically nimbleness and patience. And like Exfil says all the time, like you really can't teach patience, but you have to find ways. Like he cuts it off there, but like in my opinion, I think you have to find ways to kind of circumvent that. If you want those shares now, yeah, sure, grab it, try it, whatever, right? But just know that you're gonna have to pay a premium price for that, especially if there is someone active there, or like it's mostly algorithms nowadays, but if there's an algorithm active there to screw with you, right? But essentially having that type of patience to wait there, yes, you will be a big order that's lit on that market, and if someone is big enough that wants to sell to you, they'll sell to you, right? But oftentimes you might actually accidentally, unintentionally influence price depending on your size. So the way I did this back in the day as a liquidity provider without trying to affect the price, because my goal as a liquidity provider was to just get executions because I get paid based on the execution. So what I would do is, like, you know how I mentioned there was different routes? Well, if I was going to get a 10,000 share order, I would do 2,000 on ARCA at that current price, 2,000 on Edge at that current price, 2,000 on Edge X at that current price, and so forth. I'd spread it out in order to get that fill. And there's no way you can actually 100% tell this, because every time you send an order, it's tagged with the trader ID and location and so forth. But for the most part, that's the only way you can kind of overcome this. Or, you know, you just be willing to add in small increments here and there, different times and so forth. But again, you can choose how you go about it. That's just the way I do it, because that's just how I was trained.
You placed a buy limit order at 25.00. The last traded price is at 25.50. Price trades all the way down to 24.50 and moves back up without giving you a fill. What happened? The diagram below shows a likely scenario. The numbered blocks on both sides shows the order priority of the queue, in other words the order that are first to last in line. The order from first to last are designated by numbers 1 to 6. These are all hypotheticals, but the point here is to translate the concept behind the mechanics of limit order flow. Let's suppose that your limit order was in the segment of the queue designated number 4. Your order wasn't last in line, but it certainly was anywhere near the front of the queue. When you noticed that price moved below your order, it's possible that the first or second row of order were filled, leaving orders 3 to 6 unfilled as price began trading above your limit order price of 25.00. So why weren't you higher up in the queue? Maybe your order routing was too slow, or other traders' order routing was just much faster. Perhaps the other traders had a lower latency platforms, faster internet speed, more powerful computers, or even utilized
and this is what I was talking about, a co-located servers. So this is what I was talking about them literally blasting through mountains just to get that. They could go around it, obviously, right? But when you have piles and piles of money, you blast through that mountain just to get that sliver of speed. And the co-locations is basically them building around these exchanges, being like physically, geographically closer to the exchange.
So why weren't you high? Low latency isn't a significant factor for every trading strategy. Swing traders and position traders can often get by without high-frequency trading like speed. But if your intention is to take advantage of order flow on a low-latency scale, then speed counts. Should you use a low-latency platform, upgrade your internet, or subscribe to co-location services? It really depends on whether your strategy depends on it. But if your trading approach does depend on speed, then not having
I'm just going to say this outright. You can't compete with them in an HFT type of environment, especially with, like, I don't know if you guys are just trying to, like, most people are just doing swing trading and or just position trading and stuff like that. But most of these guys, they're hitting, and again, this is an extra nuance to this. There's a midpoint order. So if you see something at, like, $10, you could actually hit the $10.50. That's actually another market out there too. And again, this thing is just, there's so much to it, and I can't teach this in a single session. Like, you have to kind of just pick this up as you go. Yeah, HFT is high frequency trading. Yeah.
Should you use a low latency platform, upgrade your internet, or subscribe to co-location services? It really depends on whether your strategy depends on it. But if your trading approach does depend on speed, then not having a means to execute quickly might work against your performance. The bottom line. Contrary to the hype you've probably heard from various proponents in the retail trading space, order flow isn't that secret panacea that will give you a permanent advantage when trading the markets. Whether this helps or does nothing is up to you, your trading personality and your trading approach. Don't abruptly change your trading approach based solely on order flow data. Instead, try utilizing order flow tools in a simulated trading environment.
Yeah,
Find
so
a way
basically
to make
paper
order
trade.
flow data enhance your current trading methodology.
So obviously, like they said, and I keep saying, like, if this helps you, great. Like, these are just little tidbits that give you a slight little edge over other people. Like, if I had to get out of something, and I know a lot of people are trying to get out of the same stock, and I'm the biggest one there, what are some little tricks that I know that can help me, like, give me an extra little advantage over everybody else? Like stuff like the midpoint order. People will get pissed because they'll be like, "Oh, why am I not getting filled? I'm seeing stuff on the time and sales and stuff like that." Well, it's because someone's willing to pay a tenth of a sorry a tenth of a cent, half a cent more or less than you are. So therefore, in terms of priority queue, not just the timing, but also in price. Price is usually the first indicator. They'll hit the price first because they're at a half cent, and once he's done, they'll go to you. Well, that's not fair. Blah blah. Well, you should have learned the rules. I mean, that's all I could say on that subject. Yeah. So I know that this part was really dry. I wish there was more pictures to this thing, but this was only 15 pages, and this is like in this world, this was really short and a very small explanation of like just a little fraction of little tools and a little nuance and tricks to this stuff. And like Millennial said, it's unfortunate that you guys can't get access to this stuff. I know, but I don't have access to this stuff anymore too, right? And they are essentially slowly cutting off certain access to certain edges where we have in this field. But you gotta learn how to play this game. So, like I said, to reiterate really quickly, this is order flow. So when you see an absorbent amount of buyers come through, there is a possible long bias into that thing, and vice versa. But it's not 100% of that situation. You have to look at other underlying factors into that situation, right? Let's see. Where was it? Yeah, so order flow imbalances, so forth. Yeah. So again, this is not a 100% thing. There are some tools you can, like Bookmap, for example, you can use to kind of enhance what you're currently doing, but it shouldn't dictate fully the entirety of what you're doing. Is basically what I'm trying to say. Like Bookmap is a nice little cool little tool to impress people, make it seem like you're some top level expensive trader, but honestly, just looking at simple price like there and just making a determination, it's like, okay, well, why am I going long? Why am I going short? It's because of XYZ reasons. Does it align with my trading strategy? Yes. Okay, cool. We'll try it or whatever, right? And if it doesn't go your way, you just cut it and move on. And I said this yesterday, and I think I can't remember if I said it on stream or off stream with Rita and Millennial, where I said that I feel like when I shifted to just more fundamental trading, I became less happy and just more like irritated by people because they don't understand what's going on. So like we saw this every single time Hut dropped down. They're like, "Oh my god, it's the end of the world." And Millennial does this like, "Oh my god, Millennial, why? It's the thing. This is supposed to be the one, the chosen one, so forth." Right? What are they saying now about Hut? Now that it's hitting $12 now? Yeah. Yeah, $12 right now. It's like, "Oh my god, this is the best thing ever." Oh, they're all flying off the hinges for this stuff. Yeah. So trying to stretch this out to an hour. I don't know if anybody's still here or not, but if you want to ask any questions, you have about a minute and a half to do so before I start considering cutting this. All right, so I don't see anybody, so I'm just going to close this out by saying, thank you for showing up. Some of you guys, thank you for liking, commenting, subscribing. I hope that you take something out of this. I know it's a lot to take in, but hey, okay, you are here, Chris. If you have any questions, throw it up. I'm just wrapping up here. So if you guys do have any questions, let me know. I usually hang out in Rita's Discord directly after this. And got an example, how would you use the info? Like when you say you've got a buyer at X, how does that inform your trade, right? Okay, so let's see. Let me see if I can set this up. Let's take this hype one. Okay, so can you guys see this? I don't know how to make the font bigger, but okay, so when you have a buyer at X or whatever, right? What I'm looking for typically is someone that has a large sizing that's just inordinately large, right, compared to everybody else. This might not be the best example, but so like most of these people here are like buying 100 shares, 6,000, 3,000, so forth, right? If at, let's say, $8, I have this guy here with, yeah, it's moving pretty fast there, but there's about 43,000 shares there. 43,000 is big, but I typically want to see bigger, but I will just anchor myself to that point because that's the biggest in the book so far. Like I see another 10,000 to 810 and so forth or whatever, right? But if this was like, 100,000, 200,000 shares, then that's something I would note in my book because, and again, you can apply the order flow thing to this. Did this 200,000 shares get hit? Like what was the volume at that point? Did 8 get filled and did they bulldoze over him, right? And again, this has to lean in with spoofing. If someone is posting, like, let's say, 1,000,000 shares at $9. Oh, yeah, here's a great example of this. 169,000, nice. 169,000 plus 50,000, so that's about 210,000, 220,000 shares or whatever, right? I want to know that guy got filled because I know that's a real order. I know someone actually wanted to get that order at that price, right? But if they post that there and they yank it, because like we just learned with the order flow situation, they yank it, that share didn't get filled, and I know that was a spoof order. So what they were trying to do was they were trying to suppress that price to get a better fill in that, get a better fill at the current price here. Like so, if they think that it's going to go beyond $9 and they're trying to get an order, like let's say 1,000,000 shares, they're trying to keep this at 868 for like the longest time possible until they can acquire as much shares as possible, as many shares as possible, or whatever, right? Again, there's a lot of little nuanced tricks to this where they can bring it up to this thing, and once they're filled that order, when it gets close to $9, right? Let's say I in one side tell another market maker, it's like, hey, I'm not done filling this. I haven't had my fill yet, right? I still need about 200,000 shares. He'll slap on another 100,000. He'll slap on another 200,000, and he'll essentially try to. Again, you can't do this because this is actually illegal, but he will essentially try to bully the price back down. Again, this is highly illegal. It's called pushing or whatever. But until I get my fill, until I get that remainder 200,000, I will let him know through whatever means possible. I don't really know how they do it nowadays, but I will let him know, and then that 200,000, as we approach that price, will just suddenly disappear. And people will freak out and be like, oh, cool, that guy's not there anymore. Let's just buy this shit up, and hit it, right? Next thing you know, you burst through it and so forth. That's the idea of that. Again, like I said, this thing is somewhat illegal because that's considered market manipulation, but good luck trying to prove that from a retail level. You would need institutional access, not just from me, but with the NSCC and whoever does all the trade clearings and stuff like that. So, yeah, I hope I kind of encompassed that with a little example too. But yeah, there is a level 2 on TOS as well. I don't think so. You guys are familiar with me constantly saying dark pools and stuff like that, right? You'll have level 1, which is the surface price. We'll see what the bid and ask are, right? And then level 2 has the depth of market, which you see with what I just showed with the level 2 window, right? You'll see like all the prices and the orders and stuff like that down below. Like I'll pull it back up here. So yeah, you'll see all these things. That's basically level 2. You'll see all this sort of stuff here, right? In terms of the extra prices and so forth. But level 3 is what I kind of talked about, where you kind of have a little bit of a dark pool situation there, because level 3 can be like Goldman Sachs has what's called I think it was 2 sigma or a sigma 2, I believe is what their ATS is called. But whenever they say they have like a ATS thing, that's essentially their exchange, and it can be considered a dark pool. So you won't see that because they won't actually publicly light it, and you would have to, like I said previously, you can't see it because you don't have the subscription to that service, and they might not be handing out subscriptions to that service because it's their own internal thing, right? So yeah, it's not as detailed. It's And it's nothing you can do. It's nothing that TD can really do. It's just some people have their own ATSs set up, and they'll fire the order when they see the price there. So, yeah, I think that about wraps it up. Yes. Okay. Cool. I made it past the hour. Okay. So yeah, again, thank you for coming to the stream. Thank you for asking questions and hanging out and stuff like that. I hope you learned something. Hope you take away some things here and there. Again, like this doesn't have to be the end all be all of situations. There are multitude of other different types of people that have different types of experiences and different types of successes. This is just the way I do things, which is not very sexy. It's not reading a single headline and making a judgment based on that. In my opinion, there's a lot more to it that you should add, but if it works for you, it works for you. I can't do anything about that. So yeah, don't forget to leave a like, subscribe, leave a comment, and check out some of my socials down below. My subscribe star, which I have to redo the video for the I still can't find a good name for it, but the Weekend Warriors stuff. It is barely, if I have it, and I pull it up on this thing. That is the other question.